Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today we've got Rohit Srivastava. He's the Chief Investment Officer and Portfolio Manager with Saroj and Bhanu Fund. I've asked you to come on today to talk about a little bit more in depth about this Investable AI-Based Cannabis Index. Its competitors are POTX or MJ, that's the ETF MG Alternative Harvest Index. They've both been battered down, but they've had some dramatic gains and dramatic losses. So I kind of wanted you to break it down and compare the two to our own AI-based algorithm and how that differentiates. So what sets it apart? How is it doing? And really kind of just explaining it a little bit more as it pertains to MJ and POTX and really what that difference is. So appreciate you being back on the podcast, Rohit.
Sure. Thank you so much, Josh, for having me again. And like you said, that we talked about that we wanted to do more dive into what sets us apart. And so here is some data around comparison about with MJ and POTX, the two cannabis index, which is the popular cannabis index in the market. And we're going to compare our investable index with that. But before that, disclosure that this is all for entertainment, this is all for learning, this is all we are just telling based on what we learn and what we have understood about the market and about our investment ourselves. But to start with, POTX is basically purely invest into the cannabis, hemp, and CBD related stocks. And this is little stats about where this originated, when this originated, how much assets they had under management, and how much outstanding shares do they have right now. Now, I remember about a month ago, we tried to talk a little bit about how much assets they had, and they had about 9 million, but they lost in the last couple of months. So it's now about 7.8 million. And this is a high level allocation. This is the top 10 holdings they have right now. Kronos and GWPH, those are the two big ones they have. And the top 10 factors in the 73% of the overall portfolio they have. Now, the performance of their in the last 1 year or less than 1 year is about, they have down about 59%, and they basically year to date they have been down about 41%, which gives them like an average daily loss, average annual loss about 56%, which doesn't mean anything because it's basically they have not even finished 1 year right now. But overall, if they continue with this, they probably in a year they might have about negative 56% loss in there. Now, did some analysis on like these are the top 6 of them, which basically they have the allocation and the performance year to date this year. Now, the year to date, their performance overall is 41%. I want to point out that the negative 41% out of that, about 14% of their losses is due to the top 6, and the remaining of them is about due to the remaining stocks which they have, which is very interesting to me, which makes me believe that the ones which basically are a smaller portion, they are dying like crazy. That's what it really is really representing. And I mean, and they are doing it for hedging, but I mean, this is the kind of market which we are dealing with, is that market, specifically to cannabis stocks itself, that there is a huge volatility, there is huge losses in these companies. That's what I am concluding, is that the smaller companies are actually losing big time in that. And that's what it basically, I'm not sure, you're an expert, so you can chime in and talk more about that. But let me talk about MJ a little bit, and they do a lot more variation in that. They do legal cultivation, production, marketing, cannabis, tobacco products. They do all different kinds of things. And they have been longer in the market. They probably were the first one to actually be there. In 2015, that's when they actually launched with about $441 million in asset. This is their background. They also have the Kronos and GWPH as their top 2 holdings, and their top 10 holdings represents about 54%. So they are probably more diversified than MJ. which one is better? I think probably I'm not sure at this point, because they both are doing pretty bad at this point. I mean, anybody related to cannabis is doing pretty bad in this area. But based on their performance, this is how their performance has been in the last 1 year. The graph is showing the last 1 year, but overall this year they have been about 35% down, and their average loss in the last 5 years has been about 12%. Means like every year you'll be losing 12%, 12 to 13% every year in the last 5 years. A little bit of analysis on the top five, top six, and the top six similar performance as to POTX, where they are having high losses in the year to date, and very similar that the top six are the one which basically are causing less loss than the others. Now, just more information about that these allocation keeps changing. They probably keep changing their allocation based on when they have to clear them and when they have to buy new equities. So this is a very high level. So, but overall, again, the same idea is that more than very less losses are due to the bigger ones, but they have diversified, and all the smaller ones are actually also taking a huge cut around this. So net out of all what I'm trying to explain in this is that their allocation is very plain, is very simple. Is that we're gonna buy GWPH because of these fundamental reasons, so we're going to invest in these. They're very they're investing based on that, but there is no intelligence around that. Should they not invest at this point, or should they stay in cash, or I'm not sure even if they can do that, but I think they can probably keep a reasonable amount of money in their cash aspect of that. But that is the factor where they're not having the capability of getting in and out of the market of certain thing. And when the whole cannabis market itself is going down, there is a lack of things of doing anything around other than just being in the stocks at that point. Because all of them are doing bad. There's none of them basically which are doing any good in that.
One thing I wanted to ask about MJ, or just to kind of drop a seed, maybe pick your brain, is the money flow index. The MFI we had on our podcast earlier this week showed a huge spike. There's a lot of money coming into the industry, but as it pertains to MJ, they had $1 billion in assets under management, and now it's a little over 400 million. So they've lost 2/3, or roughly $600 million in assets under management, and yet money flow is increasing. So all I can kind of take away from that is people are taking it out of an index that's doing as poorly as MJ and POTX and putting it into more risky equities. So is that your take as well? Is that maybe they're putting it into individual stocks rather than a portfolio?
That is a huge possibility. And you know what, our analysis doesn't account into like the overall MJ, which basically they're actually holding them versus that. But I think that's what they might be doing, is that they might be a lot of funds, basically they have these individual stocks in the portfolio, so it doesn't factors into the MJ itself, MJ or POTX. And that's what you're saying is, I agree with that part. That is, I think a lot of funds are probably now investing into individually rather than going through these indexes.
That sounds really risky, but I guess we'll get to that. And how risky is it to buy and hold versus letting an index do the work for you? But
that's correct.
Maybe I got ahead of myself, so I'll let you get to that.
No, that's good. That's talks about our investable index, and we've been talking about our investable index, and our investable index is again also very similar to the picks which we have. Is very similar to what MJ is, that it uses legal cultivation, marketing, distribution, properties, tobacco, cannabinoids. It does all different kinds of investment, and the three main factors of our investable AI index uses artificial intelligence. It uses intelligence to identify what to buy, or which one is a good buy, which is not a good buy, and stuff like that. And it basically allocates funds based on its market cap. So if there's a higher market cap, it gets into the market. If the lower cap, it probably goes very conservatively in a smaller amount. And I'll talk more about detail a little bit later. And also the most important out of all of this is using intelligence when to be in the market and when to not be in the market. That's basically the key part of the investment. Um, and the results, the performance is in front of you, and that's what it does. Is that overall this year we had about 17% gain versus -42 and -35 on POTX and MJ respectively. So I guess we'll explain. And a lot of people ask, like, you know what, how everybody is negative, how are you positive? And we'll talk more about like why it's the investable, why the AI brings a huge value out of this. Giving a little bit of what does our artificial intelligence mean? And our intelligence mean is basically it is a tool which gathers data. It evaluates all equity based on that data, creates models around that, and does emulation to find out if it's a good buy or not. Uses machine learning so that as the market is changing, basically it changes those models and basically predicts based on all this data, predicts on that. Now, one of the factors which all traders use, the whole market uses, is the technical analysis techniques, which we cannot ignore. So considering that as one of the factors of the artificial intelligence is the key part of that. So this is what our artificial intelligence from a high level looks like. Allocation of fund is completely based on what the size is. So a company like ABV, which has about a market cap of 122 billion, we basically weightage as 26%, which means that 26% of the portfolio will be allocated into that. Versus a Kronos, which basically you see that a lot of both of the funds, that's basically their top investments, right? And there could be a plus side, there could be a negative side onto that, but that is top investments, and about 4.5% we allocate into that. And very small like NBV, we basically allocate 1% of that. So the allocation is completely based on market cap. And the third part, which is go long when basically there is a signal. And in order to do that, let me give you an example of Kronos itself. And this is if we did not have any signals and we blindly invested on the 1st of October and like sold it on the 7th of April as of yesterday, we basically would have 32% loss. Like regardless, if we put $100, it's $68, regardless of whatever the amount is. So we would have, but if we had a signal where it says, you know what, now it's a good time to buy, or now it's time to sell. Basically, we would do multiple trades, and you can see, like as an example, it bought like for 8 days, and then it bought for like what 16 days, and then kept for about 5 days, and kept for about 15 days. We would incur profit and loss during that time, but the overall gain is a lot higher. It's like almost 60% difference between those two. And that is what this signal, the AI does, is any stock you buy, any equity you buy, basically when to buy and when to sell gives a good idea about on the profitability. Now, like in saying, this is not like a crystal ball that it tells every time it tells correct. It's based on probability, and sometimes you're going to have loss and sometimes you're going to have gains. And the idea is when you have a loss, you take small losses and you take bigger gains. That's what the idea of these signals are.
And that predictive analytics has a crystal ball prediction of about 3 to 7 days out. Is that right?
That's correct. 3 to 7 days out. That's correct. Now, but also if there is 3 to 7 days out, but as soon as it basically sees a risk, and let's say that, you know what, today there's a signal to buy it. Like let's say on this one, on 1023, it had a buy a signal and it bought at 877. And with time, it basically realized that it's basically turning negative, and it just sells and gets out of it. So it has a prediction on that, but it's not a stubborn prediction. It will get out if it finds, and that's what the general investors have the problem is with the emotion, is that not to have an emotion. If there's a loss, just let's get out of that loss. And then sometimes no, like we're saying, right? Sometimes there's a loss. So saying that, you know what, this is every time accurate is not accurate. itself. Like there is nobody in this world, not even Warren Buffett can predict like a positive side, right? They have to mitigate risk, and sometimes there is wrong. So, but you know what? Last couple of weeks when we were talking about our like how there was a huge spike in MJ and POTX, but ours didn't go that high, and like you might question like why it's not smart enough to understand that. And I want to give an example about car insurance. Like if you have a car insurance and you're paying $300 a month, in 5 years you're probably paying $18,000. Now if you have a car accident after 5 years in the car, they replace your car by $50,000, and if you don't have any accident, what is the comparison? Are you going to say that's a loss of 18,000 or a gain of 32,000? No, this is not about, the car insurance is not about loss or gain. The car insurance is about managing your risk. That's all that you're doing. It's you're managing your risk, that it doesn't get bad or it doesn't get worse. You basically are trying to pay a premium for basically making sure that you're not into bad situation. And similarly, that's what our AI does. Is AI basically, it manages risk. And just like a car insurance, or just like anybody who has any vehicle or any medical insurance, in the long run you will be in a better situation. That's what the medical insurance is. In the long run, it's going to be in a better situation. And I hate to give insurance as an example, but the idea was to tell that, you know what, when we are managing risk, there is sometimes a downfall to it. And here is an example of it, that a very recent example, that in March, when the first 18 days, the market was tanking and the market was down 34%. And we were down about 1.5%, 1.5%. But after that, the market picked up and they grew by 33%. But we grew by about 8%. And then the market fell down again by 6%, and then we grew by 2%. Now, the factor which you're seeing is that the net loss which MJ had in the whole March is about 18%, which means like $100 became $66, and the $66 became $81, and the $81 became like $80, whatever that number is. But with that fluctuation, you can see that the whole net loss in March was about 18-19%. But we are trying to trigger when to buy and when to sell. We're trying to use AI to find which stock to buy. That control is basically having us a positive return in March. And want my viewers to understand that all the people who are questioning, like, you know, why and how is it possible that MJ is negative and you guys are positive? You might be faking or telling a lie or something around that.
Too good to be true.
Too good to be true. This is too good to be true. And I want to explain them that, you know what, this is what it does, is that basically when it sees a market risk, it stays conservative. When it gets into that, it stays aggressive.
So can you infer on risk management what they're doing, being passive or active managers? Is it just a simple matter of having a riskier algorithm, or is this on purpose? Do they have to make riskier bets in order to dig themselves out of the steep hole that they're in?
You mean?
Do you have an opinion? I mean, I know that you don't know what it is one way or another, but just by
I do have an opinion, and
okay.
I do have an opinion, and the opinion is that it might be a very rough opinion, so please forgive me for that.
We won't hold you to it.
Yeah, this is all for entertainment purposes, anyways. Right. So, so MJ or MJ or POTX, they have a fee of 0.75% to 0.50%. Any assets which are not invested, they basically will not get any fees out of that. So they have to be invested in all of these. So getting out of the market is very difficult for them. Well, however, like funds like mine or other investment funds, their bread and butter is from the profit. If we don't make profit, we don't make any money. So there's a huge fundamental difference about, you know, is a company with an asset of $500 million cannot have an AI system to that? I'm sure they can have an AI system, but why can't they basically get out is because they will lose their fees if they're out of the market for a month. And I think that's probably one of the drivers in my view, is that, um, that 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 basically differentiates, is that we earn our bread and butter from making profit. They don't. And that's where from a fundamental standpoint, from this point of view, I think we want to be smarter our money from our investors' money. So we want to invest money when the market is hot, and we don't want to invest the money when the market is tanking and there's a high risk around stuff like that. So I would say fundamentally that's my view. That's totally my view about why getting in and getting out of the market is harder for an index versus us. So significance of AI, we already told you, like, okay, when to get on, when to get out of the market. Why is it so important? And we listed 19 stocks in our equities in our portfolio, and we're talking about these are the 19 cannabis index stocks, the stocks which will be traded in the cannabis index. And if we didn't use AI, and we just blindly bought this and sold it on a particular day, with our weighted investment based on, like, oh yeah, this one is we're buying this because higher market cap means higher investment, and we plainly did that, we would be resulting in a negative 29%, which will still be less than what overall MJN POTX is doing, but it's still pretty bad. It's still pretty bad. In the last 6 months, we would be still suffering the same way how we would be doing. But if we have an AI basically which tends us to buy when we have to buy and sell we have to sell, we are about 48% ahead on that. And to reiterate to the viewers is that, yes, the way how MJ operates, the way how POTX operate, the way they operate is they can't do anything, and that's why they're in losses, because the whole cannabis market is in loss. They can't do anything around that. But that's where is our differentiator, is that we're using our AI to invest at the right time and get out at the reasonably right time. So it's not like we always get out, pick the bottom and catch the top. Like you can see here, sometimes there's loss, sometimes there's gain, but overall we are a lot more ahead in the market than what other companies are being there. And we are not doing anything related to without AI. We are completely using an AI to invest and get into the market. And like you said earlier, that yeah, sometimes it's going to basically, we're not going to gain as much as the other stocks are doing, and we might miss a small spike. But overall, in the long term, we probably the AI is going to do a lot better than the other non-AI based system. Again, comparing back to the comparison, that this is the performance of how it has happened for our investable index versus MJ and POTX. The two main factors that they're weighted, their weightage in investment is not related to market cap. Their weighted investment is related to how the companies are doing, and more fundamentally, and what they think that the growth prospect is. Versus we are doing completely based on market cap. And we are using completely smart, using the AI for trading smartly, versus they're doing a plain investment, in and out kind of investment, staying in or staying out. How can you invest? You can invest through your brokers for the MJ and POTX, any Ameritrade, E-Trade, whatever you use, you can buy that. But if you want to invest anything around cannabis index, basically that's what the fund is. Partner with Saroj and Bhanu fund, basically, which uses their AI tool to invest into this cannabis index. Why should you invest? We basically do completely AI-based investment versus plain investment, and our gains are a lot more higher than what you can imagine in the cannabis market is. So that's what I have for you, Josh, giving an idea about why we do what we do, and in comparison with MJ and POTX.
Yeah, that's a beautiful presentation. 108% difference between MJ and 109% difference versus POTX. I think the numbers speak for themselves. So, yeah, that's an exciting presentation. I'm excited to keep looking. That's a 10% difference every single month. Over the last 8 or 9 months since August, we're doing 108 to 109% better than the competition. I think I'd take that risk reward with AI over what they're doing. Even if they can get 20 to 30% in 1 week, you just showed that they can lose it the very next week. So I'm more than confident trying to get more and more of my friends, family, and clients on board with this AI-based algorithm, seeing the last 3 quarters, month over month over month, doing so much better than the competition. I do laugh when people tell me it's too good to be true.
Yeah.
I mean, proof is in the pudding right here, but I think it's going to
Yeah.
be interesting for a lot of people, whether they believe it or not. Again, the numbers kind of speak for themselves. It's fascinating to see this every single week.
Yeah. And for all the people who basically they want to go back to the podcast and see our podcast from the last 6 months, we've been signaling, talking about what to buy and what to sell, when to buy and when to sell. We've been talking about that, and we've been doing that and keeping a track of what have been bought and what have been sold. So
Yeah, and copies of those previous podcasts are on your website as well as on the Talking Hedge. So you can find those all over the place. But I guess with that, we're going to roll this one up. I want to thank my guest, Rohit Srivastava, Chief Investment Officer and Portfolio Manager with Saroj and Bhanu Fund. Thanks for being on the podcast.
thanks for having me, and I appreciate the time. Thank you.
Thank you. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.